I think we should already be over 100K. It's probably still some price suppression going on, but realistically, it should be over 100K, I think. And once we cross that barrier, it'll go up very quickly. At least I think so.
Okay.
Just looking at the macroeconomic environment, looking at the massive amounts of debt, interest to service the debt, and rampant printing, rate cuts, it's all tying together and pointing in the direction of up for Bitcoin.
Samson Mow estimates that Bitcoin's price is currently suppressed, but asserts that based on macroeconomic conditions, debt, inflation, and central banks' ongoing rate cuts, Bitcoin is poised for substantial growth. Crossing significant price milestones like $100,000 could trigger a rapid upward trajectory as confidence builds. He points out that debt and fiat devaluation in the U.S. and other nations amplify Bitcoin's appeal as a deflationary asset. Mow discusses the impact of U.S. Bitcoin ETF, which hold a massive amount of the available Bitcoin supply. He suggests that U.S.-based ETF may dominate the market due to their access to liquidity and large capital pools. This centralization of Bitcoin with an ETF has implications for retail investors and smaller institutions seeking entry points into Bitcoin markets. Mow mentions the concept of a multiplier effect, which suggests that the entry of large corporations or sovereign wealth funds into Bitcoin could lead to a 20x price appreciation due to limited supply.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Bitcoin, if it becomes as valuable as we think it will be, it'll be coveted by governments, right? So another question that came up tonight is why bother doing this? Well, it's because if Bitcoin is valuable, if it succeeds in its mission, they're going to want it anyway. So better that we engage and we have better informed policy or deregulation of money than, I don't know, they ban self-custody and they try to go after people and make it a hellscape, right, in terms of regulation. But the governments are going to want Bitcoin eventually. So it's just a question of how they get Bitcoin. Are they going to start seizing it from people? Or did we get them to set up a mining operation like Bhutan or El Salvador, and they're mining it themselves because the state has energy. Most energy companies are state-owned. The election being over removes uncertainty, and markets don't like uncertainty.
Yeah.
So regardless of who wins, we'll see some upward movement. We'll see something happen. If Trump wins, I think we'll see him implementing the plan. At least all the Bitcoiners that are pushing for him are going to try to get him to do his plan, the strategic reserve. I think some of the senators also want it to happen too. So that will kick off this new cycle. I think we should already be over 100K. It's probably still some price suppression going on, but realistically, it should be over 100K, I think. And once we cross that barrier, it'll go up very quickly. At least I think so.
Okay.
Just looking at the macroeconomic environment, looking at the massive amounts of debt, interest to service the debt, and rampant printing, rate cuts, it's all tying together and pointing in the direction of up for Bitcoin. It could be that the US ETFs are going to dominate simply because they have that large lead. They have that large pool of liquidity and capital. It could be that MicroStrategy is the only one that ever will have that much. Even if Apple wanted to come in, can they catch up to MicroStrategy? Not certain that they could, because as they start to buy, they're going to move the market. If you want 250,000 Bitcoin, and that was where that multiplier comes in, right? The one that I talked about in my talk. I think 20x is a good conservative multiplier that you could say will be the increase. So good luck trying to get 250,000 Bitcoin. And even though we're not at all-time highs right now, I would say there's a resurgence of interest, and that helps definitely. But when people don't really understand Bitcoin, price is sort of the indicator they're going off of. Like, is it going up? And is there hype around it? And that kind of opens the door for discussions. But the prevailing theme, I would say, is people in countries that need Bitcoin are more interested just naturally than people from wealthier countries or governments in wealthier countries. Those ones are more interested in protecting what they have, seeking to regulate and control, whereas countries in Latin America, the global south, they're looking for money to come in, either through tourism or from investment. And they're not worried about, do we have all the right regulations in place? It's sort of more about the people and the prosperity and just letting them make a living. The biggest challenge is just perception of Bitcoin as a risky thing. I was in Taiwan, Japan, Korea, and a lot of the concern is like it's risky, and the people there kind of have their own limitations set already. They're like, we are too conservative to do something like Bitcoin. And maybe we'll wait until, let's say, the US does something, and then we'll do something. So it's a very wait and see attitude and a self-imposed restriction that we are too conservative. And that's the biggest barrier. And I try to explain to them that being risky and conservative is like two sides of a circle. If you're trying to back away from risk, or trying to be more and more conservative, eventually you go to the risk side, because Bitcoin is a technology, and if you're shying away from it, your risk is that you miss out on that technological revolution. It's like cars are risky. We're gonna not use cars, and we'll stick with the horses, and then you miss out on automobiles, and of course you're gonna miss out economically. Same for airplanes. Airplanes are risky, especially if it's Boeing. So are you gonna avoid airplanes, not have a national airline? Maybe, but you're also going to miss out on opportunities too. So I think that's the number one barrier. People think, we are conservative or Bitcoin is risky and we cannot cross that chasm to Bitcoin. But then I try to present the reality, which is you will cross that chasm eventually. So it's either you choose to do it now or after the US. And the ETFs, whether you like them or not, are a great illustration of this. So a lot of countries waited for the US to push out the ETFs. Hong Kong was waiting for the US. Australia was waiting. And then SEC said, okay, now they have almost 1 million Bitcoin. Hong Kong has 10,000 something. Australia has 100 something. So if you wait, then you're gonna fall behind. Trump is gonna probably win. He'll create the strategic Bitcoin reserve. And even if he does 20% of what he said he's going to do, that's still 200,000 coins. So how many coins will Germany have? Or pick a country, Argentina. The window, I think, is closing very rapidly to accumulate a significant chunk of Bitcoin. And people haven't done that mental calculus yet. Like, how much has been bought by the ETFs? A massive chunk. How much has MicroStrategy accumulated? A massive chunk. Can another company do a MicroStrategy and get 250,000 Bitcoin? I don't think so, because you're also fighting MicroStrategy and all the new ones like Semler and Metaplanet and the ETFs at the same time, and potentially a strategic reserve from the US. So there's not a lot of Bitcoin left to fill coffers to the tune of 250,000 BTC.
Anthony Pompliano speculates on the scenario if Trump or any similarly positioned candidate wins the presidency and pushes forward Bitcoin-positive policies. This shift in the U.S. would likely have a domino effect globally, prompting other nations to adopt pro-Bitcoin stances and possibly pursue national reserves to avoid being left behind. Such moves would accelerate the adoption cycle and further establish Bitcoin as a valuable reserve asset.
I think that the long-term trend in financial assets in America is up and to the right. Whether that is stocks, Bitcoin, real estate, commodities, etc., the dollar's going to get devalued. I do think that Donald Trump is perceived as much better for financial assets, and so that's why you're seeing stocks rip. If Harris had won, I think you would have seen financial assets go down in the short term. The question if Harris had become president is, what policies actually would have been enacted? If you enact unrealized capital gains tax, you're gonna hurt a lot of stuff.
Yeah.
If you don't do that, then maybe she wouldn't have been that bad. One of the things is the stock market has done just fine under Joe Biden, right? Actually, if you look this year, this S&P 500, this is the single best performance of the S&P 500 since 1936.
Did not know that.
Now, you can argue that some of it is Biden's overseeing this great economy, which, okay, he gets some credit, but not all the credit. You could argue that artificial intelligence and kind of this boom, technology shift has helped. You could argue that the businesses are getting more efficient, so they should be more valuable in terms of Facebook, Amazon, Meta, etc. And then you also could argue that the stock market is going up in anticipation of Donald Trump becoming president. So the beauty of finance and what makes it so intellectually stimulating for so many people is you can't put your finger on any one thing. You have to start to understand stuff. And so people may say, like, why are we spending so much time on politics? Well, because macroeconomics, the political landscape, financial assets, the individual beliefs of people in a society, all of that feeds into how does capital get allocated and where are returns captured.
Yeah.
If you think about the loss of trust in the mainstream media is one of the reasons why Bitcoin is winning. They don't seem connected, but the loss of trust in the mainstream media is extended to a loss of trust in institutions. And so you can draw a dotted line between a loss of trust in the mainstream media to a loss of trust in the Federal Reserve. And so people say, oh, wait a second, this is not going to work for me. Let me go store value and save in this other asset. And so those are the types of things that as an investor, it's kind of like the 101 is just like stock go up or down. 201, you say, will stock go up and down because of things related to this company? But when you get into the more sophisticated levels of analysis, it's trying to understand if Donald Trump becomes president, what is the monetary policy changes we're going to see? And how is China affected by that? Because if China now thinks that they're in a competition to devalue their currency against the dollar, then all of a sudden they're going to pump liquidity. They're going to drop interest rates. That's going to bring more global liquidity, which will then flow into financial assets. And so actually China's monetary policy is more important than the US. Mm-hmm. Those are the things that people, I think, at the highest levels of finance are trying to figure out right now. We now have the first Bitcoin president. If you put somebody in the White House that says, I am pro-Bitcoin, I'm going to protect your Bitcoin, I'm going to protect your right to self-custody your Bitcoin, I'm going to do things that will be a tailwind for your asset, and I'm going to create a strategic reserve of Bitcoin on the United States government's balance sheet, obviously Bitcoin's going to go up.
Mow emphasizes the connection between declining trust in traditional institutions, such as mainstream media, central banks, and government entities, and Bitcoin's rising appeal. For many, Bitcoin represents a form of financial independence and autonomy, free from institutional manipulation or inflationary pressures. He draws a dotted line between the erosion of trust in these institutions and the growth of decentralized systems like Bitcoin. As trust in fiat-based systems declines, individuals increasingly seek refuge in Bitcoin as a hedge against currency devaluation and economic uncertainty. Mow's message is clear. For those who have not yet engaged with Bitcoin, the time is now. The risk, he argues, is not in Bitcoin itself, but in missing the opportunity to participate in a transformative shift. Countries, corporations, and individuals should recognize Bitcoin as both a strategic asset and an evolving global currency.
Please like and subscribe my channel.